Good evening, everyone. Thank you for all of you guys for joining this session. So today's session, the objective is going to talk about the tax saving ideas from whether from personal taxes or through using the LLC setup. Based on my experience, so far I'm helping hundreds of clients, and I'm finding out a lot of people are paying a lot of taxes, too much taxes, and unfortunately they don't have idea, okay, what are things they can legally do. There is nothing illegal. There are a lot of things we can do legally to reduce your taxes. So that's the objective of this meeting. I'm hoping this will be very helpful to everyone. And for a quick profile background, so I'm a CFA, Chartered Financial Analyst, and I did MBA from Johns Hopkins University, and I founded the Samatva Wealth Management 6 years ago. And Samatva Wealth Management is a registered investment advisor, and I'm a fiduciary advisor. So I have been doing this almost now more than 10 years on the financial planning, retirement planning, asset allocation, business consulting, and I'm also part of board of advisors for a few startups in DC, Maryland area. So that's my high-level background. So with that, I'm going to let's start with personal taxes, because we have to understand first what's the tax rates in the IRS and the United States government uses. So if you look at this slides presentation, so this is the tax rate what currently IRS uses. So if your income is, we'll talk about, let's say you are filing jointly. Okay? So if your income is up to 20 grand, it's like 10%, and between 19,751 to 80,000, it's 12%. Then between 80,000 to 171, it's 22%. So what they call it's a progressive tax system. So the more your taxable income, then your tax rate is going to increase. So the reason why I want to spend a few minutes with you guys is, so in order to reduce your taxes, the important thing we can do is try to reduce this taxable income. I know whatever the income you get, nothing we can control that, but there are ways we can legally reduce your taxable income, so that way you can reduce your taxes a lot. Okay? So I'm going to quickly walk through one simple scenario. I think it will be very helpful for you to understand. So one of the ways you can reduce your taxable income and minimize your taxes is a 401k, which is offered by employer retirement plan. So if you work for any company, they will actually request you to enroll under the 401k retirement plan. So under that plan, currently IRS allows you to contribute up to $19,500 per year. Okay, so with that, so let's take this example. So if you look at this, let's say in year 2020, your income is $120,000. Let's assume you made a contribution of $19,500. So now, after your contribution, your taxable income is now only $100,500, right? Then since you are now filing married jointly, you will get a $24,000 as a standard deduction. So now your taxable income is going to be only $76,000, right? So with that, if you do the math, remember this is falling under below 80,000, right? So that's why your 12% tax rate will be applicable. So that comes around, you will be paying $9,980 to IRS. But now let's run the same scenario. Let's say you didn't make any contribution, absolute, let's say 0 401k contribution. Let's see what happens. So now your income after 401k, since you didn't do anything, it's still 120k. And after the standard deduction, 24,000, now your taxable income is $96,000. So what's going to happen is, so IRS will tax you 12% up to $80,000. Then from the $80,000 to $96,000, you will be taxed at 22%. See the huge jump? It's almost 10% extra taxes you'll be paying for that 16,000. So now your total tax is going to be 13,000. So the difference is, you can clearly see almost $4,000 difference, right? So I'm sorry, yes?
So you're sharing only the PPT of your profile. I don't see anything that you are talking. It looks like you're sharing.
Oh, really? I'm sharing the spreadsheet. Let me.
No, we are not seeing that.
We're not seeing that. Okay, let me select that.
We are seeing the
No, I'm sharing that though.
No,
I can see the spreadsheet as well as the sound.
If you joined in the web browser, it is not changing. But if I go through the application, it is working fine.
Okay, let me maybe 1 second. I'll share only the spreadsheet one time. 1 second. Let me undo this. Okay, are you guys able to see the spreadsheet now?
I can see.
Yes. Okay, that's good. I'm only sharing the spreadsheet right for the time being. Okay.
Actually, we joined from the browser. I don't think we see that. We see only your profile.
Yeah, browser has the problem, I guess.
Oh, really? Okay. Then no issues. Maybe what I'll do is I'm recording this, so whoever needs just ping me through WhatsApp or send me an email. I'll share this recording. Then you can see it. Okay.
Yeah.
I don't mind sharing this spreadsheet also. It's pretty straightforward. Okay.
Okay. Yeah. Thank you.
Okay. Thank you. But the logic is simple. What I'm trying to tell you guys is, by reducing your taxable income, so the savings is going to be enormous. Even with the $90,500 contribution, can make almost $4,000 difference per year. And if you do another quick analysis, let's say for saving $4,000 every year, right? If you are doing for 20-30 years for a 6% return, that's going to worth almost more than $300,000. Yes, sir. So the important thing all of you guys have to understand is, don't think it's a small amount of money you are losing, which is not true. Because the $4,000 every year you are going to lose, if you would have invested somewhere, right? Even with the 6% return, that could have actually been worth almost $300,000, more than $250,000, right? It's a lot of money. So that's why the importance is, try to find a way legally to reduce your taxable income, and in turn you save your taxes, and then invest that for something else. Let me go back to the PowerPoint again. Okay, sorry. So I hope you guys can see the presentation now. So the main thing is, so if you look at it, and why it's so important is, whenever the tax rate changes drastically, if you look at here, it changes when it jumps from $80,000, right? It moves from 12% to 20%, and also the higher income earners, when you're jumping from actually almost above 171, then it's 24, then above 330 to 26K, then it jumps to 32%. So that's why you can clearly see one simple strategy, at least try to see if you can reduce into the lower level tax bracket. So that way, at least you'll save enormous taxes. So that's one strategy. Okay. Then move on to the next item. So how do you save? So there are a lot of tools available when it comes to your personal taxes saving. So as we talked about your 401k, which is a very important one. So you can do $19,500 per year, and if your age is above 50, then you can also contribute what they call is a catch-up contribution, another $6,500. So that's one avenue. Then in addition to 401k, you can also technically do, there is a traditional IRA, there is a Roth IRA. Okay? So for traditional IRA, it's a pre-tax, so you'll get a tax benefit now, and you can contribute $6,000 per year, and then there is a catch-up contribution $1,000 if you're above 50. Then there is an income limit for the Roth IRA. So I think if you are single, it's around 140, and if you are married, I think it's around 208K. So if your income is beyond that, you cannot do the Roth IRA directly, but if it's below that, you can directly do the Roth IRA. As you all know, the Roth IRA is the after-tax contribution. So you are not, because you are putting after-tax dollars, but the advantage is you don't have to pay any taxes beyond that. So whatever the gains from the Roth investment, you don't have to pay any taxes on the Roth account. Okay? So let's say due to some reason your income is beyond 208K, so you cannot do the Roth IRA, but there is a backdoor option available. So what you'll do is you'll still contribute $6,000 for you and $6,000 for your spouse to traditional IRA. Then you can call your brokerage and then move that into Roth. That's what they call the backdoor option. So that's still available for everyone. Okay? Then there is another vehicle is called HSA, Health Savings Account. So this one, if you have a higher deductible medical insurance, probably your employer will offer the HSA, and I have seen some employer even contribute $500 or $1,000 matching. But maximum, if you are single, you can do $3,100, and if you are married, you can do $7,200. Okay? So these are the three main things when it comes to as a personal tax for the 1040 or tax filing. So I would recommend or try to utilize these things to reduce your taxes. Okay? And in addition to that, there is one more thing, 529 college savings, but that doesn't impact the federal tax. But there are some states actually allow you to deduct your state tax. For example, if you are in state of Maryland or state of Virginia, you can deduct. Let's say if you have two kids and if you are living in Maryland, you can actually contribute almost $5,000 per kid. Let's say for $10,000, you will get a state income tax deduction. So that could probably save maybe around $1,000 of your state tax. Okay? So that's also something you can consider. Okay? So pretty much, so whatever I've discussed, so all of this is applicable to your as a personal level taxes. You can use that to reduce your taxes. Okay? So now let me move on to the next one. Another thing is, I know most of us all invest in stocks and ETFs, right? If you are investing under your 401k, IRA accounts, then the good thing is you don't have to pay any taxes, right? Because those are tax deferred, and if it's in Roth, then you don't have to pay any taxes at all for all the gains. But let's say if you are managing these funds under your brokerage account, like Fidelity, Robinhood, or any brokerage account, right? So as soon as you sell, when you buy, that's okay. But if you sell it, then you have to pay the taxes, what they call is a capital gains taxes. Okay? And also there are two types of capital gains taxes. If you hold it for at a minimum 1 year, then you will have to pay only the long-term capital gains tax rate. That's again, it's based on your income. So if your income is from $0 to $53,000, then technically it's a 0% capital gains tax. But if it's between 53 to almost even 469K, then your capital gains tax rate is 15%, which is again, so a lot of cases maybe better than your personal taxes, right? If you look at personal taxes, we have already seen, sometime if your income is, let's say, even above 80K, it'll be 22%. But here in the capital gains here, you will only have to pay 15%. But the key thing is you have to hold your stock or ETF investment at least a year. So this one I'm seeing, I think a lot of our folks are doing that mistake. They're heavily doing a lot of short-term day trading type of activities. But unfortunately, it will work against you, because if you look at the statement, the short-term capital gains are taxed as ordinary income according to the federal income tax bracket. So whatever I showed the previous slide, so what's going to happen is if you trade frequently, like a day trading or within 12 months in and out, then whatever the profit, the gains you are going to make, the whole thing will go into your as an ordinary income. So that's going to be increase your taxable income, and you are going to pay whatever the top tier taxes is. So it could be 22%, 22, 24, or 30, whatever it is, whatever the bracket you are falling. So that's the taxes you'll be paying. So my recommendation is whether it's your employee stock plan or even your own brokerage, I would recommend at least try to hold it for minimum a year. So that way you will, at least from taxes perspective, you will not get penalized that much. Because I've seen people make, let's say, $300,000, right, from their brokerage account. But guess what? They probably end up paying 30% rate. That means $100,000, almost 1/3 will go to IRS technically. There is no way we can escape from that, right? But if you're strategizing cleverly, let's say if you hold it for a year, then if you make the same 300,000, then obviously your tax rate probably will be will be half, maybe like $45,000 only, right? So you'll save enormous amounts from your taxes by doing that strategy. Okay. Then next, so then the next strategy is again the reason I'm reviewing this is I've seen most of our guys, husband and wife, they are mostly working under a W-2, right? So when it comes to W-2, you only have very limited options to play with it to reduce your taxable income. But if you have the opportunity, because I know some of you guys work through layers like IT consulting, so you'll have one consulting company, they'll take some cut, and another company, and a lot of time, I think if you talk to them, instead of W-2, you can also work for either a 1099 or a corp to corp. If that flexibility is available for you, I would recommend either the husband or the wife, you could consider setting up as a LLC, which is called a pass-through entity. So I have just listed out the process. I know a lot of people think setting up LLC, which is a very difficult thing to do, which is not actually in US. Everything is available online. So all you have to do is select your company name, do a name search, because every state has to open a company, they have a department called the Department of Taxation or maybe Department of Tax Assessments. So all you have to do is do a Google, go to their website. In their online website, you can do a name search, and also you can online itself you can submit the application. Then you'll get the article of incorporation. Then once you get that, then you go to the IRS website. Then you apply for the employer identification number, which is nothing but similar to your Social Security. Remember, for individual, we get the Social Security number. That's your tax ID. But for businesses, it's called EAN. It's an employer identification number. Okay? So then once you have that, then you create an operating agreement. I'll cover that in a minute. So that's the legal document. Okay. And particularly, if you are going to partner with your friends or a group of people, I would strongly recommend do this operating agreement and with the guidance from either CPA or a lawyer, because this is your legal document. Because I have seen always a lot of challenges could happen with a partnership down the road, and this is a legal document which protects everyone in the LLC. Then once you have done your article of incorporation, your employer identification number, operating agreement, then you go to the bank, okay, and then you can set up a business bank account for your business. Okay? So pretty much that's the process. You can do it within a week. Okay, all whatever the things I'm telling, setting up the LLC I know if you have to do the same thing in India or other countries, maybe taking 3 months or 6 months, but in US, my experience is within a week you will be able to do all those things. Okay? So that's one thing. Then the next thing is the operating agreement, as he said, which is a very important document. So that's where you are going to capture your company formation detail, capital contribution, how much you are going to do and how many members are going to contribute. Because remember, based on the capital contribution, your equity will be decided, your profit distribution will be decided. Then your management, who is going to manage the LLC, your any compensation, bookkeeping. Let's say if member want to leave, then what's the class? Then, or if you want to close the business, what condition it has to meet. And the good thing is that this operating agreement, you can change it later. In order to change that, you have to do it as an addendum for any changes. Then that also will get officially get added to your operating agreement, which is a Word document, and all the members have to sign this document. So that will be your final document. Okay. And as I said, if you are planning to, as a friends or group of people, if you are going to do that, then I would strongly recommend do this operating agreement document in a proper legal manner, because ultimately that's going to be protect everyone down the road. Because the LLC, the one good thing is it's a limited liability corporation, right? So the reason why we are doing LLC, the reason is because it protects your liabilities. Let's say if you are doing some business and somebody sue your business, since it's an LLC, they cannot garnish your personal assets, so your home or your retirement thing. So they cannot come and grab all your personal assets. So that's why you are doing this LLC. That way you are limiting your liabilities. Okay. Then, so by doing this LLC, as I said, remember, let's say if you have a husband and wife working in W-2, if one of you guys, let's say, get an agreement from your employer to work as a corp to corp or 1099 so that you can get the income through LLC. So now you could save a lot of money, right? Because legally there are a lot of expenses you can expense as a business, but not as an individual. So I kind of, again, this is not all the expenses, but I would say maybe 80% it covers. And it differs from business to business. Maybe IT consulting may have a different kind of business expenses versus we are having a real estate investment, and obviously your expenses could be differ. But as you can see, you can pretty much declare any automobile expense, accounting, or your mobile computers, any education, and liability insurance. Another thing is if you are doing business, I strongly recommend at least buy a general liability insurance, and you can expense that. And medical insurance, your health insurance, you can include that. Any licensing fees, bank charges, if you're paying for the CPAs or advisors, you can deduct that. Payroll taxes, internet marketing, your meals, your office expense, parking, postage, supplies, and also travel. Let's say if you have an employee and they have to travel to meet your business need, there is a process. So they have to submit how many miles they travel. I think the rate is like 58 cents per mile. So you can reimburse, then you can deduct that as a business expense, utility expense, web hosting. So like that, I know it differs from business to business. But as you can see, it allows you to deduct legally a lot of expenses related to your business. So that is going to reduce your taxable income, because all these LLC, when you set it as a S-corp, as I said earlier, it is a pass-through entity. So after you deduct all these expenses, and even you can run small payroll for the as a owner, then only the remaining will be passed into your personal income taxes. Okay? So call it as a K1, Schedule K1. We'll cover that later. So that's how the profit or even loss too. So let's say if you incur a loss, then that loss also can be passed through to your personal taxes. That will reduce your taxable income so that your personal taxes also will go down. So that's another strategy. Okay? And in addition to that, one important thing with this advantage of this LLC is, let's say if you are making an income, right? I would recommend this LLC option if you are making, let's say, more than 100,000 to maybe 200,000. I think you can use this tool, the LLC setup, so that you can take an advantage of SEPIRA that's eligible for your LLC or the business. Even if it's a single member LLC, you can still do. Even if you are in 1099, you can still use the SEPIRA. Because with the SEPIRA, you can deduct up to 25% of your income. Okay? Then let's say if you are declared as a S Corp, remember the S Corp is purely for taxable purpose only you are declaring, right? So with the advantage of the self-employed or what they call is a profit sharing 401k plan, you will be running a payroll. So as part of the payroll, you can deduct the $19,500 as an employee contribution, just like if you are working for another employer through W-2. Then on top of it, you'll also take the 25% of your payroll. So let's say if you run a payroll for 100K, so technically you will deduct $19,500 as an employee contribution, then plus $25,000 because the 25% of 100,000, right? So another $25,000, you can deduct that as a business expense, and it will directly go to your retirement savings. Okay, so that way your carryover income, the net income, will be very low, right? So that you, as we already saw, that your taxable income will go down in a bigger size, so you will save huge taxes. Like I said, you could easily save, I would say, even maybe 20,000 if you are in the upper level. So that's a lot of money. And if you are having LLC for 20 years. Another thing, even if you are in business, I know a lot of people, whatever the profit they make, they keep reinvesting, right, to the business. That's a good thing to do. But I would strongly recommend to minimize the risk, because at some point you are going to retire when you're running a business, right? So I would strongly recommend use this tool. Always save some amounts in your retirement, even if you're running a business. So that way you can save and invest so that will grow. So by the time you retire, that you will easily have $1 to $2 million in your portfolio, right? Even if your worst case, let's say something happened to your business, but at least you have enough retirement savings, you don't have to worry about anything, right? So that's your backup plan. So I would strongly recommend to do that because it helps you to reduce your taxes, and also you don't have to worry about anything because you will be pretty much self-funded for your retirement. Then let's say if you're making maybe 300, 400K, then I know a lot of doctors and lawyers, they also use another plan called defined benefit plan. So using this plan, you can actually deduct from your business, contribute 100 to 200K. But one drawback with this one is, remember, as long as only you and your wife, your spouse are part of the LLC, the owners, then only you can take advantage of these tools. Once you hire additional full-time employees, then unfortunately, if you have to do that, then you have to offer the SEPIRA solo, you have to offer the same thing to your employees too. Okay? So in that scenario, then what you can do is only you can do it the normal 401k only to that. So whatever the one I covered, as long as if you don't have any other employees other than your family, maybe just you, your wife, maybe you can also run a payroll for your kids too, then you can take and use this strategy to minimize your taxable income. In turn, you'll reduce your taxes. Okay. And so related to that, setting up those things, if you need any help, that's consulting services I provide. So I'll help you to set up these things and also then manage the funds. So you can reach out to me in the future if you need any help with that, okay? Including the LLC setup consulting also I provided. Then there is, so we talked about that, whatever we talked, a lot of things is applicable for IT consulting. Then I have also seen there is another strategy you can do is invest in rental properties. So this is another way you can reduce your taxable income. So you set up an LLC to buy a few properties. If it's one property, I don't think you need an LLC. You can technically even do it as a Schedule C. I'll cover that in the upcoming slides. But if you're planning to buy 3, 4, 5 properties, more properties, obviously that means your rental income is going to go higher, right? Then by doing the LLC, you could use the depreciation expense. So that depreciation will help you to offset your taxable income. Okay. Then in addition to that, if you have a few properties and make maybe 100K, then you can also use this SEPIRA and other tools to minimize the income also. So that combo strategy you can use that. Okay. Then let's say if you are making beyond maybe $500,000 or $1 million, then I would recommend instead of using maybe S Corp, maybe you can consider the C Corp. But the C Corp, there are pros and cons. Your tax rate currently is at 21%, but the thing is you'll be taxed again. So from your C Corp, the thing is it's not a pass-through entity. Remember when we talked about S Corp, the LLC S Corp, you're not going to retain the profit in the company. Because as per the IRS regulation, every year your profit or losses will have to be passed through to your personal taxes, rather 1040. Okay? But with a C Corp, you can retain your profits within your company, but you have to pay this tax rate 21%. But imagine, I'll give you an example. Let's say if you are making $1 million, right? If you are in S Corp, what's going to happen? The whole $1 million is going to come to you as a personal taxes. Definitely you'll be putting at a 34% tax rate, right? Which is, but if you are going to do the C Corp, probably you are going to save a lot in taxes. But if you're going to take the distribution, then you will have to pay the tax again. Your personal taxes will be, again, you have to pay that. So I think, again, this strategy, I would strongly recommend discuss with CPA or advisors like me. Then you decide whether to go for the Schedule C or S Corp or C Corp. So which one makes sense? And the good thing is you can always start with even Schedule C. I'll cover that in a minute. So the yes.
I have a quick question. Can you go back one slide?
Yeah, sure. This one?
One. Yeah, that one. So buying an investment property, if you float a LLC for a IT software company, then can we buy an investment property like a summer house or a beach house under this?
Yeah, you can. Just update your operating agreement, and maybe when you're filing also, when you're doing the article of incorporation also, you can mention that too. You can do that. No, nothing to it. Yeah. Good question. And there is another one, I know a lot of guys asked about this, maybe I'll cover that and then we go to the next slide. So when you are doing in your business, so currently what's happening is you take this income into your personal, then you open a brokerage account, your excess savings, then you invest, right? Instead of that, you can also technically do is you can open a brokerage account for your business, then you can invest that money also. In fact, you can set up LLC purely for investing purpose. You put your capital and open a brokerage account, then you can invest under there. So that way, so that the income you can produce, or if you're producing other income, either you can offset with your gains and losses too. But I would recommend another thing is don't use the margin account, whether your business brokerage account or your personal account. I know you can make a lot of money by using the margin account, which is your leverage, your borrowing, right? But it's a very, very dangerous thing to do, because I've seen because you never know how the market is going to react, right? So then the margin calls could be triggered in a second. It could pretty much wipe you everything. So that's why I wouldn't, if you're doing the brokerage account, my recommendation is always follow the long-term strategy, no day trading, don't use the margin account, be patient and be disciplined. If you have that, then go on and do that. Otherwise, I wouldn't encourage to play with it. Okay. Then let's step back a minute. So we talked about the simple LLC, the single member LLC, all sole proprietorship, then S Corp, right, again within LLC, then C Corp. So for that, when you go to the CPA, they always talk in Schedule C, Schedule K, 1120S. So I just want to give some information so that you can understand. So I would recommend, if your income is going to be maybe less than 50 grand or so, I would recommend even you don't have to create an LLC. Even if you do, set up a single member LLC. Okay, so that way all you have to do is you have to just file a Schedule C along with your 1040. So even you may not need a CPA help. You can even use a TurboTax. You can, but still take an advantage of whatever the expenses I covered. You can still use that, and also you can use the SEPIRA. Also you can use that. Okay, so depending on your income, I would recommend, because this is a kind of a lesser paperwork and less fees, right? So that's something you can consider. But if you are going to make, as I said earlier, maybe 100 to 200K, I would recommend maybe it's a better strategy to work with CPA to declare as a S Corp. So that's where you are going to file 1120S for your business tax. Then part of that, your CPA will take care of the 941, that's a quarterly tax filing. Then at the end of the tax filing, one more thing here, you guys have to understand, the business tax filing, the due date is March 15. So every year, March 15, the CPA will have to file this 1120S for S Corp. Then they will give you a Schedule K1. So that's where your profit and losses will be reported in the K1. So let's say if you have two partners in your S Corp, so you will get a 2K1, and if you make, let's say, $2,000 profit, so 50% equity for, let's say, the profit sharing, so each one will get K1 for $1,000 and $1,000. So when you file your personal taxes, you have to include that K1. So in any LLC, or if you are investing in, let's say, in LLC in a real investment for with others, then they will provide you the K1. So you have to include that. So the one advantage is, in case if it's a loss, then you can use that to offset. Then if it's additional income, then obviously it will be increasing your taxable income. Then whatever the tax bracket, that tax rate will be applicable. But as I said, between 100 to 200K, but doing the S Corp, the strategy is you will run a payroll for you or your spouse. Okay? The good thing is you don't have to run a payroll for the whole amount. So because the IRS is only the reasonable level, which is you can probably do at least maybe 50%. So that way you can reduce your payroll taxes, and then you can use the other vehicles I mentioned, all the legal expenses you can claim, and the SEPIRA or the self-employed 401k you can use to minimize your taxable income. So that way you don't have much to pass through to your personal income. So that way you will save a lot of taxes. If you don't have that, let's say if you don't want to do the S Corp, and instead of that you decide to work as a W-2, even though you have opportunity to work as a 1099 or S Corp or a Corp to Corp, you could actually, you'll be paying, my guess will be at least $20,000 taxes you'll be paying easily extra. Okay. But at least if you can do that, definitely you can save a lot of taxes. Okay. Then beyond that, as I said, if you're making more than $500,000 or $1 million, then think about maybe the C corp, right? So that way, probably it's better than your S corp. Okay? So again, I know I covered a lot of things, a lot of technical accounting jargon, but it's not that complex at all. Okay. With that, I'm going to let's open up for Q&A. So I think first thing is let's go through who posted their questions in the chat window. So we cover that first. Then after that, you can, if you have any other question, you can just only unmute. The reason is I'm encouraging to paste it in the chat so that the background noise we can limit. So let's start with Nandini. Could you please go ahead and start reading the questions? You can go through that first.
Yeah, so our first question is from DC. Can H1B folks set up an LLC?
Yes, the answer is the H1, H4EAD, or the requirement is you have to be legally here. I know people always kind of little fearful. If you're in H1, you cannot do an LLC. That's not true. So you can still open a company. The only thing is obviously you cannot run a payroll for your company if you're in H1, right? But you can still hire others and they can work for you and you will be the owner and you'll file the taxes, all the proper tax filing, then you are fine. So that there is no legal issue that prevents H1B cannot open an LLC like that. You can definitely open an LLC.
Our next question is, how can LLC be set up and help if myself and spouse are full-time employees?
I'm sorry, could you please read that question again?
Yeah, how can LLC be set up and help if myself and spouse are full-time employees?
No, if you are both are full-time employees, then I don't see any purpose for setting up an LLC unless, as I said earlier, if either one of you guys wants to work as a contractor or as a consultant, and if your employer agree to pay you as a 1099 or corp to corp, then go for then open an LLC. Or as I said earlier, if you want to maybe do a few rental investments, then you can open. Or I've seen our folks, maybe let's say if you want to open a organic food business or any business, right, other than your regular job, then it makes sense to open an LLC. But if you only want to just do a full-time employee and work for W-2, you can still open, but you're not going to use effectively because your income from the business will be zero. So I don't see any value by doing that.
Next question is, can I set up an LLC for the rental property through it with mortgage?
Yes. But again, then you have to either need to have the enough backup from your business, or then you have to use your own credit to get the bank loan. And also, if you are normally investing in a empty land, bank won't give a mortgage. But if you are buying a property that produces a rental income, and if you can show the proof, then based on that, you can get a mortgage too. Yeah.
How are F&O taxes calculated?
I'm sorry, could you please repeat that question? Yeah.
How are F&O taxes calculated?
F&O. I'm sorry, I still didn't get that one.
I think they mean futures and options, I believe, Mari.
I'm sorry, which one? Future?
Probably futures and options. I'm just guessing.
Oh, I think it's still the same thing like stocks only. So if you are trading anything within 12 months, then it will be considered as a short term. It will be reported as a ordinary income. because most of the options are, unless it's a leap, then it's going to be less than 12 months, right? If you're buying 3 months options or 6 months, pretty much it will go as a short term. It will report as ordinary income.
How is LLC and Scorp different? Which one would you recommend when you have 7 to 10 people to start a business?
I'm sorry, how many people?
7 to 10 people.
7 to 10 people, okay. Yeah, then I would recommend to initially to start as an S corp, because you definitely need a Schedule K1 so that 7 or 10 people can include that in your personal taxes. Then once you produce your business grow bigger, then you can maybe go into a C corp. So the good thing is, initially you can set up as a S corp. Then you can work with your CPA to actually convert the S corp into C corp. Okay. So the only thing is, you have to do that by March 15th of year. So let's say for this year, if you have a S corp, if you want to change it to C corp, that's effective from January 2021. You have to do it by March 15th of this year. So technically, if you this year you have to do it by tomorrow is the last day for that. Then if you miss the boat, then you have to wait until next year. Then you can only do it for the next year.
Under the article of incorporation and operating agreement, what is the significance of the single member LLC?
Yeah, Nandini, can you talk a little louder? I think it's very difficult to hear your voice.
Okay, can you hear me now?
Yes, it's better. Yeah, please go ahead.
Under the article of incorporation and operating agreement, what is the significance in single member LLC?
For the single member LLC, it's not much, because the operating agreement it's going to be just one person, correct? So the same thing again, the article of incorporation also. So in that case, as I said, if you are going to make more income down the road, then go for the single member LLC. So later on, you can declare as a S corp. But if your income is going to be less than 50 grand, then I would recommend, unless, as I said, if you have any litigation problem, if you want to limit your liability, then do go for LLC. As I said before, by doing LLC, it will limit your liabilities if somebody is doing litigation. So other than that, from the income perspective, I would recommend if it's less than 50 grand, then I would recommend just do it as a sole proprietorship instead of doing LLC. That's something you can do. Yeah.
Would you recommend keeping 3 to 4 properties in one LLC, or create a separate LLC for each property?
Okay. Yes, I think this is a great question. I would recommend this one, probably run it through some attorney too. Both has pros and cons, right? By having everything in one LLC, maybe you can effectively manage your taxes, but your liabilities could go high, right? So let's say if you have 4 properties in one LLC, and one of the property, let's say some legal issues, and let's say somebody sued you, then technically they can come after you to garnish the other 3 properties too, technically. So that's why, from liability wise, which is a bad thing when you have 4 properties under one LLC. So in that case, maybe it's better to have one LLC per property, so they are legally kind of separated. But then you have to obviously do 4 different tax paperwork, right? But at the end, you'll be instead of having one Schedule K1, you'll get a 4 schedule document you have to do. But I would, for this case, probably I'll recommend consult with attorney too.
Is the LLC be tied to a specific business defined in the operating agreement / company setup document?
Yes. So when you are creating the LLC, you will be doing the article of incorporation. So that's where you're going to indicate what kind of business you are going to do. Then you'll also put that in your operating agreement. But again, as I said, you can always amend that. It's not an issue. So if you're, let's say you started for one purpose, let's say that the business didn't click, but you want to do another business, but you can still use the same LLC, but you just amend your article of incorporation and the operating agreement accordingly.
Is the LLC or the S Corp for rental property better?
I'm sorry, could you please repeat that again?
Is the LLC versus the S Corp for rental property better, and why?
Yeah, I think, remember, there is no separate S Corp, right? The LLC is the main thing. The S Corp is just a declaration you're doing with the IRS for the tax purpose only. So that's the only difference. Okay? So for if you are going to do the rental investments, as I said, if you are going to get more income, so initially you can just have just a regular LLC. But as going forward, once you start produce more income, rental income, then you can consider for S Corp. Then you can declare it, then take an advantage of all the tools.
Do we need an LLC for brokerage account or S Corp?
Again, I think this is also the same thing. If you can just start with just a regular LLC. Then if you are making lots and lots of money, then if you want to effectively manage your taxes, then you can go ahead and declare as an S Corp and then handle it accordingly.
Can a H-4 visa holder without an EAD set up an LLC?
Yes. They can also do, yes.
Whether an H-4 with an expired EAD, is it okay for them to open an LLC?
Yes, I think the main thing is make sure that you have any legal status. Okay, I think that's the important thing for opening the LLC.
For real estate, would you recommend setting up an LLC or an S Corp?
Yeah, as I said, so you no matter what, you are going to set up the LLC, right? Then for tax purposes, then you decide whether to declare as a S Corp or not. So as I said earlier, you do that based on your income level. So if you have only one property or two property, if it's not that much money, then I would recommend you don't have to do it as a S Corp. Just leave it just a normal regular LLC. But once you add maybe 4 or 5 properties, produce more income, then maybe declare as an S Corp.
What are the reoccurring costs for setting up an LLC S Corp? Is there an advantage to incorporate in states like Delaware, even though we may not be residing in that state?
Yeah, that's a great question. So normally the reason why people go to Delaware and then do it as a C Corp, the reason they do that is at some point in the future, if they want to bring in more investors, because by doing C Corp, you can kind of create, set up the number of shares, equity for your company, so that you can kind of divide that equity and give it to your new investors, so that you can attract more investors into your company. So for that, the C Corp is preferred. In fact, that's why a lot of startup companies, let's say if you have an idea and you start a company, but you don't have enough capital to scale your business, because all the startup companies, initially they get the funding from angel investors, then later on they go to the VCs, then after that it's IPO. So in order to do that, only the possibility is it has to be C Corp, otherwise the investor won't even invest. So only that purpose, that's why a lot of people go to Delaware and other friendly states to do that.
I'm working on a contract base, but I do not know about the 1099 option. I'm going to ask my employer to convert it into 1099. Is there any problem for my employer to change from W-2 to 1099?
Yeah, as I said, it's nothing wrong with that. Asking your employer. I know some employer, particularly when it goes through multiple layers, I don't see an issue. But if you are working for maybe like a big companies, right? Sometimes they may not hire you as a contractor. They only prefer to work as a full-time employee. But if you are working through as a consulting company, because even the big companies, sometimes they hire through their primary vendors, right? So in that case, there is a very high probability that you can ask them. They probably willing to change from W-2 to either 1099 or C2C.
We have an LLC, specifically a real estate investment company where all our partners are full-time employees elsewhere. Do we submit Form 8825?
I'm sorry, your voice was fading. Could you please repeat that? Get closer to the mic.
Yeah, sure. We have an LLC, specifically a real estate investment company, and where all our partners are full-time employees elsewhere. Do we submit the Form 8825?
8825. I'm not sure. I have to check that. Maybe I'll. Could you go and ask the question? Can you just send me an email? I'll find out. 8825.
Okay.
In that question, I'm sorry, but you will be getting probably definitely a K1, but each of you guys have to include that in your personal tax filing. But I'll find out the 8825. I'll let you know. Yeah, so please go ahead.
Okay. Will the single member need to do payroll process for their overall income to gain tax?
Yes. Yeah.
With an LLC, can we sponsor an H-1B for someone in India?
Yes, through your company, correct. Yeah, but for that, I would recommend work with your immigration attorney, so hire some attorney. Then you can definitely sponsor. You have to do all the whatever the paperwork needed. Definitely, you can file H1 for others and bring in here. Yes.
For showing expenses for tax purpose, does it need to be on the business name? Or can we show it as under one of our spouse's names?
I'm sorry, so could you please repeat that question again? They're asking about the expenses.
Yeah, so for showing expenses for tax purposes, does it need to be under the business name? So does it have to be on the business name, or can we still show it as under one of our spouse's names?
No, for claiming all the business expenses, it has to, what you have to do is you cannot use your personal credit card or anything like that, right? So my recommendation is all the business expenses, always use your business credit card or debit card. Because earlier we talked about the important thing is you set up a business bank account, then they'll give you a business checking card or business credit card, right? Or even checks, business checks too. So my recommendation is always use your business checks or credit card, business credit card or checking account to pay for any expenses related to your business. So that way, because you have to give your bank statement or even if you have bills to your CPA to file your taxes. So don't use your personal, then you won't be able to claim it as a business expense. Okay.
What is your recommendation about moving from traditional IRA to Roth IRA, and when is the best time to do this conversion?
Yeah, so if your income is, let's say, maybe less than 130 or so, I would recommend go for traditional IRA, because sometimes they will reduce your taxable income, so that way you will probably paying less taxes. But if you have more income, then what's going to happen is even if you put it in traditional IRA, you will not get any tax benefit. In that case, I would recommend move that into a Roth, or if your total income is less than 208K, then you can directly put it in the Roth IRA. So again, it all depends on whether you are getting tax benefit now or versus later. But if the scenario will change, let's say if you have a case, let's say they are earning some money through your part-time job or internship, for them I would strongly recommend open a minor Roth IRA, then they can contribute up to $6,000. Because so that way, because they are not going to, for your kids, since the income is so low, there is no tax problem at all, right? So I would recommend for them directly use the minor Roth IRA to contribute in that state.
What will be the cost of K1 per state? Partners are located in Virginia and Maryland.
I'm sorry, the cost for setting up the business?
K1.
Yeah, the K1 actually is done by the CPA. So you have to handle all the business taxes, or if you have to run a payroll, I would recommend the CPA fees probably will vary from I've seen maybe $500 to $1,500 per year. So again, it all depends on if you have to run a payroll, filing the 1120S, then they'll produce the K1 along with that and give it to you. Okay.
If we move to a new state, can we retain the LLC with the original state, or do we need to close that one and open one into the migrated state?
Yeah, you can still keep the LLC as long as it's active. If you're producing the income, you can continue to use that. But let's say if you are not producing any income, it's nothing, then I would recommend it's better to close that. Otherwise, what's going to happen is there is one thing I forgot to mention. There is a property tax return you have to file every year to the state, which costs around like $300 per year. So I would recommend if you are not going to make any business or no income at all, then you better close your LLC. Otherwise, you are going to incur $300 fees every year to make it active, keep it active.
Can you move existing taxable stocks account to an LLC? And what is the value in having taxable brokerage under LLC?
Yeah, I think it will make sense if you are also producing some other income from your other businesses, or from your brokerage account. If you are going to produce a decent amount of income, then I would recommend you move it under an LLC, so that way you can use some of the other tools we discussed it today to minimize your taxes. Versus keeping in your personal brokerage, right? So that's the only advantage. Because if the brokerage account is as long as in your under personal name, you cannot pretty much do anything at all, right? And if you are doing the short-term trading, everything will report as ordinary income, and that's why I keep saying at least hold for a year. So that way the tax rate will be 15% also, which will be very low here. But if you want to do as a kind of a business, and if you can make more money out of it, then I think the business option is probably a better option.
Please elaborate the advantage of business brokerage account versus individual brokerage and tax reduction concepts.
So if the brokerage account is under your individual, right, as I said, it's 100% when you make profits out of it from the short-term trading, it's going to increase your taxable income. As I showed in the slide, I can quickly show that again. So if you look at the chart, let's say the income from your individual brokerage account, let's say you make $30,000, okay? But initially, let's say your taxable income is maybe $70,000. But now suddenly you are adding another $30,000 as ordinary income from your individual brokerage. So what's going to happen? Your tax rate is going to jump from 12% to 22%, right? So whatever the $30,000 gain you received from your brokerage account will be taxed at 22%. So almost $6,000, $7,000 will be you will have to pay to the IRS, right? But at the same time, let's say if you are doing the same thing under business, and assuming if you are doing other things too, then you can use that income for other purposes, other expenses, and maybe you can also do some SEPIRA to save something, so that whatever the remaining will be passed. So let's say if you could expense to maybe, let's say $25,000, okay, then the remaining is now only $5,000 will be passed through to your personal taxes. So now obviously, as you can see the differences, right? Even if it's a 20% tax rate, you'll be paying only $1,000. So that's a major difference. So the individual probably will be paying $7,000 versus $1,000.
What is your recommendation to form a group of people of 10 to buy land and build residential buildings for themselves?
Yes, again, that's a good strategy too. But again, you have to find the right partners and have the kind of a right mentality. Then why not, right? And as I said, then in that case, make sure that you set up the LLC properly, do the operating agreement, you clearly define all the rules so that all the members are approving that, because you don't want to have conflict later on. Then it will be very, very difficult to navigate down the road.
Are you a CPA, and do you provide individual service to choose LLC/S Corp?
To answer that question, so I'm not a CPA, I'm a CFA. I'm a fiduciary financial and investment advisor. But I can advise you to what are the based on the numbers, what do you have, I can analyze and guide you what could be the best. But definitely you will need a CPA. If you are going to go with the S Corp, C Corp, because you have to do our payroll, so definitely you'll need a CPA to handle all those things. So the thing I can help you is from the consulting point of view for your business, and also setting up the retirement funds from the SEPIRA, profit sharing 401k plan, and also what are the strategies you can do to minimize the taxes. So it's mostly the consulting and the retirement account setup, and plus the portfolio management. So I can help you with allocating the funds and managing it. Those things I'm providing those services.
Can an S Corp be operated without anyone in payroll? This is for a very small single member LLC that has elected to be treated as an S Corp. The LLC is in the beginning phases, and revenue is expected to be around $5K or $10K per year max.
Okay, in that scenario, I would recommend don't declare as a S Corp now. Just do it as just keep it as just a plain LLC. Then in the coming years and months, then once you start to grow, then you can file a S Corp declaration. Work with the CPA to do that. That would be the strategy.
Do we have any standard deduction for LLCs to gain tax benefits, or do we need to show evidence for allowable expenses?
So as I said, the LLC, there is no standard deduction concept. It is a pass-through entity. So the only thing you'll be doing is, as I discussed before, whatever the income you are getting it, so you'll deducting all the legal expenses which we covered, and also you can do the SEPIRA and solo 401k, whatever the applicable one, so that you can deduct all those things. Then whatever the remaining of the profit, you cannot keep it in the business. So it has to pass through to your personal taxes.
For federal quarterly tax filing, does it apply even if there is no income?
Yes, I think if you are doing once you declare as a S corp, there are some standard regulation you have to do. Even though there is no income, obviously you will be filing, your CPA will be filing. Yes.
What's the difference between an LLC, S corp, and C corp?
So as we discussed earlier, like I said, the LLC is one entity you are going to set up first. Then depending on your income level and how best you can minimize your taxes, you can either declare it as an S corp, or you can also convert from maybe S corp to C corp. Again, it's purely based on your individual business, your revenue, your expenses, and your how much net income you're planning to either carry over into your personal taxes, or maybe it's better to retain in your business so that you can keep growing your business. So you have to consider all those factors before deciding either just keep it as a regular LLC or go for S corp or C corp. So there are a lot of factors involved here.
What are the steps covered to close an LLC?
Yeah, the closing, it's pretty straightforward. If you can reach out to me offline, I can help you. Every state has, in the online, you can find out the standard forms. So you can just file it, and along with any arrear fees, if you have to pay, then they'll close that. That's not an issue.
Can a H-4 visa holder do trading in stocks without needing work permit? And can an H-4 visa holder without a work permit do trading?
Yeah, the trading, remember, it's all considered as a passive income. Irrespective of your visa status, you can open a brokerage account and then you can trade. There is no legal issue with that, or no immigration issue with that. Yes.
Can I form an LLC with my name and run payroll myself in the LLC and earning 1099? Can I work in W-2 also?
Assuming yes. So if you are in, let's say if you are in H1, so you technically you work for a W-2 for the employer sponsor, then you can have your own LLC too. But you cannot run another W-2 payroll under your LLC for you. That will be become illegal. It will create a lot of issues for you. But as long as you don't work for your own LLC, don't do any W-2, then yes, that's fine. And also, irrespective of other visas too, you can pretty much do the same thing. You can full-time, then also have an LLC. No issues with that.
If the S Corp is in the business of software consulting, are there any advantages of accrual versus cash method? Also, if accrual method was used in prior years, can we change that cash, and what is the process?
I'm sorry, can you read it louder, Nandini? I think I'll see you.
Yeah, if the S Corp is in the business of software consulting, are there any advantages of accrual versus cash method?
Oh, okay, got it. Yeah, so this is, again, it's a kind of a financial reporting, one of the tools, whether it's cash versus accrual. So if you're having a customer, so let's say if you're running a software business, right? So a lot of time your account receivable or accounts payable, maybe 30 days, once you submit an invoice, sometimes they may take 30 days to pay your invoice, or sometimes maybe 90 days. So in that scenario, maybe you can, depending on the number of days between that, you can either go for accrual or your cash. So there are pros and cons with that, right? With that accrual, sometimes you have to recognize in revenue, even though you don't have a cash. So that means you have to raise a working capital to pay your bills, including the taxes. Okay? Otherwise, if you're 100% sure, you always have money to cover the tax liability, then you go for probably just the cash method or the accrual method, as he said. I know all the big companies, they actually go for the accrual method because they have the working capital to cover that. But for a small company, I would recommend maybe better to use the cash until you have that flexibility to handle your working capital. Okay.
After joining an LLC member in a group, if I move to my home country, what happens after that?
So you still part of the LLC and you will be getting the K1. So probably you have to still continue to file your taxes also here. Because you will be getting the income right from the LLC.
What is the procedure to hire my spouse to do part-time work in a single member LLC/escrow? Do I need to maintain any form of documentation, or is it just starting to run the payroll from the house?
Yeah, well, you can do that. There is nothing wrong with that. Even with a single member LLC, it's just one person, right? So she can work, and then in that case, I would recommend you can just do a Schedule C, so that you can still take an advantage of all the business expenses, SEPIRA and all. Then maybe once you have produce more income, maybe under 200K, on that time, then you can go for S corp, then run a payroll and other things you can do.
I have a single owner LLC and planning to open a new LLC for a group. So in this case, is it better to be a direct member in the new LLC or being an existing LLC member in the new LLC?
I think if it's a different business segment, then I would recommend segregate that separately, have a separate LLC, then so you'll be member in this and also another one. There is no issues with that. Yeah.
Can a business purchase be made using a business credit card, but with the personal email? Or is it mandatory to register using business email with online merchants before making the purchase?
Yeah, there is no mandate. You can use your personal email. That's fine.
Will I get the invoice from state to pay property tax for the LLC?
No, they don't send an invoice. You have to download the. Normally, if you are using CPA, they will actually fill out all those things, and all you have to do is just put a $300 check and then mail it to them. But if you want to do it, then you go to their website, download the form, you fill it, and then put the check with it and mail it to them. They will not do. But as I said, if you don't forget to pay, then what will happen is they'll change the status to inactive. Then after that, you won't be able to use that until you clear that issue.
Can you please elaborate more on SEPIRA?
Sure. So the SEPIRA, as I said, right now the IRS allows, I think you can go up to the maximum $58,000 contribution, or the 25% of your income. Either if you're running a payroll, it's a 25% of your payroll, or your 25% of your gross income. So if your business making gross income, let's say 100K, then technically the SEPIRA you can contribute $25,000. So the SEPIRA you are going to create for you, not for the business, but the check contribution will be coming from the business, so that you direct that as a business expense, but it will be going to your retirement account. Okay.
I opened a brokerage account directly with Robinhood. Now I need to change it to LLC. Is it better to close personal brokerage account and open with a new LLC? Or is there any other opportunities to change personal to LLC-based account?
Yeah, I think that those are totally different. The business brokerage account is different from the individual brokerage account. So I think you have to create a business brokerage separately. I don't think they'll just simply change that. I don't think so.
What is the last date to start an LLC?
You can start any date. There is no date issue. So whichever the year you're starting, so it will be active for that year, then you have to file the taxes for that year. So even any month you start, let's say if you start in December 1st for that year, then technically then you have to file the paperwork for the taxes for that year and the property tax return for that year too. So there is no limitation on the date.
If the LLC is run from home, can the utilities bill be shown under expenses?
Yeah, so for that, your CPA will helping you as long as anything is related to your business. I know if you are because of COVID, I know a lot of people are working from home. So technically you are sharing, right? So when you are declaring these expenses, so you have to tell them, okay, what percentage is related to the business. So they'll claim that %. So let's say you have an internet access you're using for personal and your business, right? So let's say you're saying 80% I'm using for business, 20% is for personal. Then let's say you're paying $1,000 bill to your internet expense. So that means $800 could be claimed for your business expense. So that's how it will be prorated.
H4 can illegally stay in U.S. based on the receipt. Can an LLC open based on H4 receipt, not the approval?
Yes, I think don't confuse with your legal status with your LLC because once you open the business, then it's a different thing, right? Obviously, then your status will decide whether it can be here or not, but the LLC, it can continue. But only when first time when you open, make sure that you have a valid status. That's the important thing. Then only you can open the business and set up the business bank account. All those things can possible.
Is it legal to receive income on the LLC if the LLC opened on H4 EAD and the EAD expired part of the year and 1099 received once the end of the year?
I think as long as you are in the EAD, when you're getting the income, I think that should be fine. But my understanding is once your EAD is gone, then I assume you cannot work because that's not an LLC question, it's a immigration status question, right? So technically, I would recommend consult with your immigration attorney.
If I open the LLC to do marketing, am I allowed to sell products, real estate, or software services?
Yes, you can do that. So, but indicate that when you open the LLC and also in your operating agreement accordingly.
Is the property tax deductible from taxable income?
Yes. So when you file for your personal taxes, yes. And also if you bought a property under LLC, yes. You can deduct that, yeah.
After opening LLC for initial expenses, can I use my personal credit card or should I open a new business credit card? And to pay credit card bills, can I use my checking account or again, do I need to open a new business checking account?
Yeah, as I said earlier, I think it's better to always use your business checking account or business credit card. So that way you have a clear separation because in the future if you run into any audit, so you will not have any issues with that. Because always, my strong recommendation is don't try to use your personal checking or credit card to pay for anything related to the business. Try to keep that totally separate. Always use your business bank account and bank credit card to pay any expenses related to your business.
Do you have any references for CPAs, and what are your thoughts on using TurboTax to self-file for single-member S-Corp?
Yeah, if you reach out to me offline, I know a few good CPAs. I'll provide their contacts. But if it's not that complex, like I said, usually the Schedule C could be done through TurboTax. But if you are good at using the software, then I think you can maybe do S Corp too, right? So it depends on your expertise. So if you're willing to learn, then why not, right? If not, then I'll go for CPA help here.
I'm making additional 1099 income along with W-2. How can I show my 1099 income as my spouse income by forming LLC and run payroll for a spouse?
Okay, so if you want to run a payroll in that scenario, then probably you have to go for S Corp to do that. If not, then technically what you can do is the other option is without running a payroll, you could do like a single member LLC and then maybe do a Schedule C to get that money through that LLC. And that also another possibility.
If I open LLC, how do we get funding? Should we start with our personal funding?
Yeah, I'm assuming this is maybe the question is for a new startup. So initially, probably you have to do a self-funding first. Then after that, you can go for seed funding, the other investors. Then later on, if you want to scale it, then you can go for the VCs. But at that time, as I said, probably better to convert into a C Corp instead of S Corp or a regular LLC, so that you can get the funding.
Please explain filing property taxes from LLC state fee of $300. Is this only if the LLC is into rental property, or is this applicable to Illinois state?
I think probably I have to check. I think it may vary from state to state. Maybe even the fees also could vary. The $300 I was telling it's mainly for the state of Maryland. But I can check it and get back to you if you drop me an email. Yeah.
Even though LLC did not have any income, is it mandatory to file taxes on the LLC?
Yes. You just file with a $0. That's it. Yeah. Right.
I bought a couple of laptops in 2020 November through December for setting up my LLC, but ended up registering LLC only in January 2021. Can these expenses be accounted for tax purposes, and if yes, under which year?
Yeah, I would recommend, since you started from 2021, so you can still put it as a company setup expenses, because that's your initial capital investments, right? So but you'll be including in the 2021 taxes. You can do that. Yeah.
I am in full-time W-2. Can I use my LLC trading and consulting and deduct training costs like generic leadership training?
Yes. Yes.
And can we get a copy of this presentation?
Sure. Yeah, just please send me an email, then I'll share it. Yes. Mm-hmm.
Do you provide a service where you can review previous years' tax returns, expenses, accountable plans, and advice if I've missed out on anything?
Yes. Yeah, that's one of the service I do, business consulting. I'll review the previous year taxes, and whether it's a personal or a company, I'll provide a guidance, what can be improved and whether if you can save taxes and all, plus on the investment side too. Yes.
Is it okay to do rental and stocks and transaction with the same LLC?
Yes, you can do that. As I said, just when you set up the LLC, indicate correctly in your article of incorporation, and also include that in your operating agreement.
Started an LLC and trying to make it successful, but not getting any contracts. So how can I deduct my expenses without any income?
Yeah, that's the beauty of the business, right? Even without revenue, because you are still taking full effort. If you look at any startup company, initially even if you look at the Amazon one time, they were actually making huge losses at the beginning of their years, right? So that's normal. So all those things technically initially will be advantage for you. So when you're making negative losses, it will come to your personal income, so it will reduce your taxable income, so you'll be paying less taxes. But absolutely, you can do that. That's fine.
If I move states, can I consider the moving expenses as part of the LLC expenses?
Again, if it's, you have to make sure that it's related to your business. As long as it's related to the business, you can do that.
Can I open an LLC in different states to get benefit of taxes?
Yeah, I think we discussed before, right? A lot of people open in Delaware, so definitely, you can open in any state. Yeah.
Those are all the questions we have as of now.
Thank you, Nandini. Okay, with that, so anyone in the call have any other question? If you want, you can just only unmute yourself and you can ask your questions too. Fine with it. If not, you can reach out to me offline. So as I said, I provide the business consulting. So I can do like an hourly. I charge maybe like $100 per hour, or I have a package, a yearly package that vary from, I charge $250 to $500 depending on the amount of work involved. It will be a flat rate, so before we'll do an agreement. Okay, so that's my fee structure, which is negotiable based on the workload. So to recap, as I said, if you need any consulting on this business side, to set up the LLC, S Corp or C Corp, or Schedule C or Schedule K, or review your past tax return, help with maybe how to reduce your taxes, ideas on reducing taxes, or setting up these SEPIRA, self-employed 401k, or managing those assets. Since I'm a fiduciary advisor, registered investment advisor, I can help you with the allocation and managing the funds. So please reach out to me. I'll definitely I can help you.
We have one more question. If we miss tax filing for some reason, how do we correct it?
I would strongly recommend work with the CPA, because the one good thing is you can, even whether it's a personal or business, you can always file an extension. Okay. As I said, for the business, the date is March 15th. For personal, it's April 15th. I think if you're not going to make it, then immediately file an extension. You can, I think, extend up to October or so. Your CPA can do that. Or even I think the TurboTax for personal also, you can do that pretty quickly. Okay, with that, anyone have any other questions? As I said, if you want, you can unmute and then ask your questions. Okay, so with that, I'm going to end the recording, and if you guys want, reach out to me. I'll share the recording too. Okay.
Okay. We have one more question. What is your suggestion about when to move traditional IRA to Roth IRA?
I think someone else also asked the same question. As I said, if you are going to get a tax benefit now, if it's going to reduce your taxes, then I would recommend do the traditional IRA now. So that way you can save the taxes now. But if your income is so high, even if you're doing the traditional IRA, if you're not going to get any tax benefit, then I would recommend go for a Roth. So that way, it's even though it's after tax money, you do not pay any taxes after that. Even if your income is beyond 208K, still you can use the backdoor option. Do a first traditional IRA, then move into the Roth. You can backdoor it to the Roth.
which LLC will I get any SSN benefits?
Which? No, your Social Security is not related to your LLC at all, because it's all depend on your payroll, right? So in that case, probably I think the S Corp will be better. So if you do S Corp, obviously you'll be running a payroll, so that way you'll have the payroll deduction. So that once you met the 40 credit qualification, normally it takes about maybe 10 years, then you'll be eligible for the Social Security benefits. Yeah.
Should I file tax as single if I am in W-2 and my wife is an LLC?
Yes. So what's going to happen is, if it's a LLC, as I said, if it's a single member LLC for your wife, then what you can do is do a Schedule C along with your 1040, since it's a single member LLC. But if you want to run a payroll for her, then take more deductions from the SEPIRA and or 401k contribution. Then better to go with do a S Corp. In that case, probably you have to do the 1120S for the S Corp tax filing. Then you'll get a K1 for your wife. Then you'll include that with your 1040 tax filing. You'll file that along with it. Okay. Okay, so I assume, Nandini, that's the end of questions, right?
Yes.
Okay, so let me then stop the recording.